lady is nothing short of amazing, and I could literally go on for hours singing her praise. Not only does she have extensive experience in Forex trading and coaching, she is a financial advisor, a retired major from the US Army, one of the co-founders of the Be Your Own Bank movement, and the visionary behind the Women Teach Forex movement. Her resume is really nothing short of astounding. So ladies and gentlemen, hailing all the way from Jacksonville, Florida, I proudly present to you my mentor, Miss Tasha Dyer. Miss Tasha Dyer, are you on the call tonight?
Yes, I am, Ms. Duncan, and thank you so very much. Ladies and gentlemen, if you have not had the opportunity to hear from her, to hear her training, to sit with Ms. Duncan, you are definitely missing out. So you definitely want to make sure she is spearheading our Women Teach Forex movement in South Florida. So you definitely want to make sure that you have an opportunity to sit in one of her trainings and one of her recordings. So I just want to thank you, Ms. Duncan, for hosting the call this evening. And I want to thank you for all that you do and being so diligently plugged into the BYOB movement. Now, ladies and gentlemen, tonight we are going to continue with what we began training and what we began talking the other day on Tuesday. This is the BYOB tools training. This is all about helping you perfect your skill set. This is always about making sure you're in the best position to win. And that's what we're here, and that's what we want to do this evening. So if you were here with us the other day, then what you know is the fact that, and bear with me as I get this set up, what you know is that we literally began understanding our candles. We began understanding our candles, and that is definitely something we want to continue this evening. We were not able to get through everything the other night, and that is why being on these calls, that is why this is so important and so amazing. So as we begin moving through, I'm going to refresh just a few things. So there are a few things that I am going to refresh, and I'm going to touch on a few other things. So I'm not going to spend as much time on everything that we touched on the other night. But so the recording is in our Facebook group. It is on our YouTube channel. So if you are a guest this evening, if you want more details, now I'm going to cover this. I am definitely going to go over this information, but I want to make sure that we get to the new information as well. So like I said, once again, it is on our YouTube channel. It is also a part of, it is also, like I say, in our group as well. So now, what we're talking about is the Japanese candlesticks. And when you understand the Japanese candlesticks, it is very important because they indicate the movement in the market. If you can read the candlesticks, if you can understand the candlesticks, you can read these candlesticks, then you can absolutely perfect your skill set of trading. The BYOB movement is definitely what we do to put you in a position to win. And we are literally here to help you understand how to do that. So when you look at these candlesticks, now what we're talking about is when you look at the charts, okay, when we first look at the charts, we're talking about this, we see candles. We always see candles, and we want to maximize our profit and understand what they're doing and how this is working. So we have two candles that we see. We have a bullish candle and a bearish candle. The bullish candle simply means we want to buy. Red candle, the bearish candle, means we want to sell. And so that is what you have to understand, and that's where it all begins. So what this tells us is that when we have a green candle, that means we entered the market, we entered low and it closed higher. That means that the buyers control the market. So, and during that time frame. And we often get wicks, which means that now we're talking big market picture. So we have buyers and sellers in the market. So what happens is you have so many people buying, you have so many people selling. So what happens is that's where these wicks are formed, because at one point it sold down to a certain point, and at one point it sold up to a certain point, but that is not where the market opened and closed. So where the market opened and closed is the body of the candle. So we open and then we closed higher, and that's where we have a buy candle, and it was pushing up. Now we close when we have a red candle, it simply means we opened higher and we closed lower, and that's bearish. So that means that we're selling. So that's what that candle means. And the same thing with the wicks. It means that we had some momentum. We had momentum in a higher buy position. We had momentum in a lower low position. However, that is not where the movement, that's not where the open and close was. The body of the candle is the open and the close. Now, we're trading on the minute. So we're trading on each one of these, we discussed, each one of these candles represents a time frame. So when you're on a strategy, when you're talking about trading, whatever we're doing, you often hear about a time frame. That time frame is either a 1 minute, 5 minute, 15 hour, 4 hour, and then it goes to the day, the week, the month. Now, yes, I skipped some, but we're always going to defer back to the platform that we're trading on. So what I mentioned is on that platform. So important, bullish engulfing patterns. So when you see this candle, you're going to see a red candle, you're going to see a red candle, which is a bearish candle. And then you're going to see your second candle is a larger candle, and it literally engulfs, right? That means, so when I have a bullish, that means that the buyers are in control of the market. So this is a reversal. That is what this is. It's a reversal. Now, if I have a bearish engulfing, that means the sellers are in control, because my first candle is a green candle, which means I'm buying, but then I got overtaken by a red candle. So they reject the buys. They are rejecting the uptrend. They are rejecting the buys that were happening, and they overtake it. So as you can see, this candle opened higher and it closed lower, is larger. So that's why it's called engulfing. It engulfed the other candle. So it's a lot stronger. So it changes the momentum in the market. Then we have the doji. The doji it occurs in an uptrend or a downtrend when the market is literally going, the dragonfly. The dragonfly. So when you have the doji dragonfly, it is a doji, but this one is actually the dragonfly. So what happens is you have a bullish doji dragonfly. So that means it opened and closed at the same price. On both of these, you see that they open and they close at the same price. However, with the bullish, which is the dragonfly doji, that means that it has a longer lower tail. So that means that the resistance of the buyers to attempt to push the market up. So it's at the bottom of a downtrend. So if you can picture it, it means that it was coming. It's at the bottom of a downtrend. And so when they were trying to form the candle, the buyers took control, and they pushed the market up. They were pushing the market. So they were buying the market. And the same thing vice versa with this one. So if I have a gravestone, that means it's bearish. So that means the sellers were pushing the market down. And so it just, the exact same thing happened. It got pushed in the opposite direction. we have our morning star. So we have our morning star candle. With the morning star, this is bullish, which means that now I'm headed in a buy position. So I'm coming from a downtrend. So I have my candle. Then I have my second candle. This always has 3 candles. So I have my candle, my red candle. I'm in a sell. Then you notice it's a gap, but the biggest thing is this is a smaller candle. This middle one is smaller. And then I have a bullish candle that shows the reverse. And because it's rejecting that momentum down. So it's turning the trend. The buyers took control. As you can see, they open lower. There is no gap here. So there's a gap here, and you'll see gaps in the market sometimes, but there's a gap. Sometimes some are bigger, some you have to actually look for. But there's no gap here. And where it closed, it opened. And it began moving in an up position. The evening star. The evening star is bearish. It's doing the exact same thing. So it's a gap, which means that they just took control. So I was buying, but now I have a small candle, which is where they're fighting over the price, but they just took control. The sellers just took control. That's what they did. Now, the hammer. The hammer is a reversal. So the hammer is going to be at the bottom of a downtrend. The shooting star, well, it doesn't matter the color, but you can also have a hangman. It looks like just like a hammer. So you'll hear a lot of times people will just call it a hammer, but I'm emphasizing the difference of the names because it doesn't happen with the shooting star. So this is what the difference is. The hammer is at the bottom of a downtrend, or it can be at the top of an uptrend, and that's when it's called a hanging man. So sometimes some people call them both hammers. So you'll hear that, oh, the hammer, but you'll see it at the top and you'll see it at the bottom of the trend. And then the shooting star is just an upside down hammer. It's the exact same thing, but this is at the actual top of an uptrend. The tweezers, okay? The tweezers show a reversal pattern, and this is a strong reversal pattern. It's a strong reversal pattern because it's a double rejection. It is a double rejection, okay? Now, you have a green candle, which is my bullish, right? And then I have my red candle, which is my bearish, but then it's rejecting, it's rejecting. So we were buying, but the sellers came in and they rejected. So it's being rejected twice, and it turns around and goes in a sell position. And the same thing with the tweezer, with the tweezers. The tweezer top, and then you have the tweezer bottom. So the tweezer bottom, it rejects it. It's a strong reversal. So I have my bearish candle, and then I turn and have my bullish candle where it turns and goes in an uptrend. Now this one is added. This one is added. Now, do not get me for messing up the names. It is a Japanese name, and it's called harami. Now, what this is what that name means. It means pregnant in Japanese, okay? If you look at the candles, it's like the larger candle, which is the mother candle, and then you have the smaller one, which is supposedly the baby. So you have these two candles, and then you have, what this is going to do with the bullish, right? So it shows reversal at the top, is reversal of an uptrend, okay? So if I have a red candle, then I have the green candle. For my bullish, it's a reversal at the top of an uptrend, and then for my bearish, it's the reversal at the bottom. So it's reversing, and it is basically, if it's at the top or if it's at the bottom, it's going to show a reversal. However, right, if you see it anywhere else, it shows consolidation, and that is the emphasis that I'm trying to make. So you'll see it at the top of a trend, you'll see it at the bottom of a trend. There is going to show reversal. If you see it in the middle, anywhere else, it's going to show consolidation. Okay? For example, here's an example of one of the patterns. Now, it looks like it moves over into consolidation some, because it didn't reverse the trend, but it moves over into consolidation. And then we got the same thing right here. And because it's at the end of that trend, it's like at the end and then consolidation. And then we have those candles where the Harami candles, that Harami pattern, where we have the larger candle and then we have the smaller candle. What that means is it's a reversal when it's at the bottom of the trend. And so now it's in an up trend, it's in an up position. We're going into a buy pattern. What is also added are 3 black crows after an uptrend. So when we have an uptrend and we see 3 candles in a sell position like this, those are strong candles. They're typically long candles, and they establish a weakness in that uptrend. So as you can see, you will, after sometimes they just continue to go straight down. Sometimes the buyers continue to fight and the buyers want in, but the reality is we're headed in a downtrend. And then we have the 3 white soldiers would do the exact same thing after a strong downtrend. So as you notice, we had a very strong downtrend, and then we get these 3 candles back to back where they're showing the change in the momentum of the market. So they're typically strong candles. They're not weak candles. They're going to be strong candles, and they're going to show a change. And when you're typically using these, they'll be on like the higher time frames, but they are reversal patterns. So, and then we have the dark cloud cover, okay? The dark cloud cover. What does this look like? As you'll see, a teacup. We trade these all the time. We just don't know what we're trading. So this you'll see in 2 different ways. A lot of the times you'll see it side by side. You know, you see the dark cloud cover. What you're looking for is it's going to close at that 50% mark or lower. If it closes higher up, that's not what we're looking for. That's not the dark cloud cover to change that pattern. But it's going to close at that 50%. So it has to cover at least half of that first candle. That's what it has to cover. This, for example, this is what you'll see sometimes. So you'll see it this way, or you'll see it this way. Same exact thing. But the key in what you're looking for is this 50% mark. That is what you're looking for, that 50% mark. And then at the bottom, as you can see, this is a dark cloud cover. And then we always get that third confirming candle. And when it's straight across, like that first example, that looking like that, if this was to look just like that, just as I said, the teacup, that is something that we trade as a teacup. And then a piercing pattern is the same thing, but it's in a downtrend. And it shows a bullish, but like I said, it's in that downtrend. And then we turn around and we get the green candle, like I say, 50%, has to be at that 50%. And then as you can see, we start moving in that uptrend. But you notice the next candle, it forms and it starts right when that other candle ends. So before we move on, do we have any questions or comments so far? Because we're going to apply this to the market tonight. We are going to apply these market patterns. I'm going to show you what it looks like on the market. Any questions, any comments?
This is Alfred. Could you clear up what exactly is the 3 black, I think you said 3 black candles after an uptrend?
The 3 black crows?
Yeah, after an uptrend. Could you explain that again?
Okay. So when you have an uptrend, so basically what we had here was a strong uptrend. We had an uptrend, right? And when you have a strong trend, something's gonna have to break a strong trend, or something's gonna break that trend. So when it reverses and it begins to turn around, it'll show the 3 strong candles back to back, and that's what turns that trend around. Because if I had a strong trend, it's not gonna just turn. So if I have a strong trend, it's just not gonna turn. So I have to have something that's going to change that and reverse that pattern. Oh goodness, hold on. Go too far. Okay, right there. So I had to have something that was reversing that. And then the same thing in the opposite direction. As you can see, this one actually says 3 white soldiers after a strong downtrend. So I had a strong downtrend, and then I get 3 strong candles. And the reason why you see the red arrow here and the green arrow here, because this was an uptrend. However, I got the strong momentum to come down with the 3 candles that confirm it, but then they're still fighting. They still fighting a little bit. But because I had the buyers are strong. That's why they got these 3 candles back to back. The buyers are strong. And so because of that, the sellers are strong. So even though the buyers turn around and wanted to try to get back in play, when we see this, we know that the sellers are stronger. And so we have now changed the momentum and we're going in a down position. And the same thing, I was in a strong downtrend. I got 3 candles, strong candles back to back. The sellers in turn still want some action. However, because I had the 3 strong candles, unless I get now I'm headed back up in up direction. So unless I get something else that changes it or something else happens in the market, which of course we will see in another entry point or with another candle, like something that we just went over, at that point, that's when we know that this trend is going to continue up. So anyone else, any questions, comments? Okay, let me go ahead on. Okay, so this is what we talked about. We talked about support and resistance lines. When we talked about support and resistance lines, when we drew them the other day, right? On Tuesday, we showed.
Can you hear me? Hello?
Yes. Yes, hello?
Yes, before you, I was trying to ask a question. Can you go back to the 3 black crows and the 3 white soldiers, just for clarity's sake? When we look at those normally are full body candles, and if from a trend perspective, we're looking to see if the trend is reversing based on 3 full body candles, that would indicate a downtrend on the 3 black crows, and the opposite would be 3 for the 3 white soldiers. It would be 3 back-to-back bullish candles, and that's also an indicator of what the charts will be doing from a reversal standpoint as well. Is that the takeaway from that?
Yes.
So these are just as a glance, as we're looking at the charts, even before we begin to identify support and resistance, we can kind of establish and look at the candles and kind of depict on what type of movement is taking place in the market by understanding these 2 specific patterns that you're making mention of this evening. Am I correct?
Correct. And if you notice, with these 2 specifically, they're typically after a strong trend. So it's after a strong downtrend or after a strong uptrend. And that's when you'll see the 3 candles where it breaks that trend. And 3 strong candles. Does that
Thank you. Thank you. Thank you.
Okay, so I'm gonna go back to where we just were. So what I was saying was the support and resistance. So looking at this, and what I did is I highlighted the support and resistance areas for you. So, and I'm gonna put it on the pivots chart, and that's what you see these dotted lines are. So the pivots, as when we are on the pivots using that strategy, the pivots are is where the market is. That pivot is always, that center point is always going to be that center point for the market. And then we have the support and resistance lines that are configured with the movement of the market by calculating the highs and lows historically of what the market has done. And so that's what the pivot points are that you see with these dotted lines when we look at the pivot strategy and when we look at using pivots that we use. However, what I did is, based on using support and resistance lines, turning it into a line chart, is I put some support and resistance lines, which are very close to the pivot lines, but remember, the pivots adjust. So that's key to remember when you're looking at this. So you still, if you need to, want to do your own support and resistance lines. If you have to draw them until you can get to the point to where you can see them. Draw them, mark up the chart, because pivots adjust. So don't rely on just the pivot lines that are on the chart, because yes, the pivot lines, they give you your entry point, they give you your exit, which you'll see in just a moment, but mark up the chart, because we want those points that touch. Just as, you know, as a refresher, we want to make sure that we're looking historically, because the market repeats itself. The market is continuously repeating itself. Now, what's important here is, when we talked about the other day, we talked about the market breaking out. We talked about how we want the movement and the momentum to happen within the market. That's one of the things that we were discussing. So when you're doing that, as you can see, that the market itself, oh goodness, I'm sorry, this computer is sensitive, but when you're doing that, as you can see, it broke, this line went from being a resistance to a support line, because it broke through this line. It broke through the line. Now, when it broke through the line, remember, it's always going to test it. It's always going to test those support and resistance lines. Always going to test it. And when it tested it, it did not push through. It attempted, but it came back down. It tested it, and what do we see right here? Look at the market patterns. You know, what do we see? We see a doji. A doji indicates a trend reversal. It indicates a reversal. And then we said it's either gonna gradually move up. Like if we look here, it was gradual. It's gradually moving up and breaking through the lines. It doesn't happen very fast. It tested it and came back down and gradually move up, or it shoots through there. And when it shoots through there, that's actually what you prefer. So when you see the dojis, when you see these things, then you know, okay, based on what we talked about, and first, I see that this is a moving average, right? This is a moving average line. When you're on the pivots, right? When you on the pivots, what you want to understand is that this is the moving average line, and you will see that, because we're definitely, I'm going to show you, I just screenshotted it, but I'm going to go back to the pivots, because this is the pivot tool. This is from IML pivots. This is what this is. So you just, and this is the moving average line that's already on there. So when you see the doji, we're going along with the moving average, a trend line, or with the trend. Remember, and then we utilize these points. Then we use these entry points, these entry triggers, and look at the money, the pips that you could have caught, because it broke through. We knew that this trend was reversing. And the same thing here. When it entered here, it tested, and then it came in a downtrend. And it broke through each one of these support and resistance lines. And it tested. And so I basically had this one on there because what we were discussing was the higher lows into a resistance, the lower highs of support into those support and resistance lines. Because what does that do when it does it this way? It gives the big market makers an opportunity to see what's going on and get into the market. So that when it's this way, you already know you're golden, and you can just push up through there and you can catch your pips. That's why I love this tool. Now, here's another example. So what are we talking about? We identified a trend. So we're in an uptrend. Once again, this is from the pivots. All these screenshots are from the pivots. And as you can see, we're on the NZD-JPY on a 4-hour chart. So, and here's a trend line. So we identified, we were talking about the trend, the area of value, and this point is my trend. But also the moving average line is going the same direction. So I know for a fact I'm in an uptrend. Now, what we have here is an engulfing candle. So this would be an entry point. This would be an opportunity for you to enter. So I know that I'm going in an uptrend. I'm going in an up position. I'm in a buy position. And then it has a pullback. But look what I have. I have the tweezers, which is a strong rejection, right, of the lower price. However, before you use the entry triggers, right, because I highlighted this for a reason. Yes, this is the tweezers, which shows a strong rejection. However, what is first? I need to know where is the market going. The market is in a buy. The market is moving up. My moving average is moving up. I'm in an uptrend. A trend is my friend. So what happened is I went up just a little, but I ended up with a doji. So I'm not going to go in a down. It's not going to come in that down position. And I ended up with the morning star, and I ended up in an uptrend. Then I have my engulf. It pulled back some more, because remember, we trade the pullbacks. We trade pullbacks. That's in our academy. That's in our training. It talks about trading the pullbacks. And so one of the things that I wanted to highlight is to make sure that, yes, this is an addition to, this adds value, because when you look at these candles, we're in the academy, and what we're taught and everything that we're shown, it shows us we're taught trade the pullbacks on these pullbacks. So now I know when to get in by looking at these candles. I know when to get into the market on my pullback. And then when I get to the top, I have a dark cloud cover. Well, a dark cloud cover tells me that my trend is reversing. A dark cloud cover tells me that this trend is over. So if now that I know I have a dark cloud cover, it tells that's a reversal pattern. So now I know that the market is turning in a down position. And guess what happened? Right after this happened, after the sellers took over, my moving average line changed as well. It confirmed it. So now I'm headed in a downtrend. Any questions on this before we move forward? Okay, Same thing, but look what I wanted to show you. We have, this is the same thing, but support line, right? We're in support lines. These are the support lines that I drew. So it was testing that line. It was testing that line. So when it came out, it went into consolidation. It went into consolidation because what did we just talk about? What is the new pattern that we just discussed? Where am I, mouse? Sorry, it's this mouse. Is the harami. I'm gonna get the pronunciation right. It's the harami. So we have the larger candle and the smaller candle. If it's not at the top or the bottom of the trend, it moves into, the market moves into consolidation. You see what happens when you're looking at the candles? The market now moves into consolidation. So guess what's right here? It's consolidated. The market is consolidated. But in this consolidation, when it's breaking and breaking and breaking on this support line, when it's pushing and pushing and pushing on this support line, you're going to have a breakout. It's not going to be gradual. So it's get ready because you're going to have a breakout. And that's what happened. You had a breakout. And look how the market just went nice and down from there. You had a breakout. It was not gradual. It was respecting the support line. It respected the resistance. It respected the support, but it kept pushing on it. It kept pushing on it. It kept pushing on it, and it broke out. It just couldn't hold it anymore. And this is how you begin to read the candles. See, we already know what the pivots do. We already know about the uptrend is our friend. We know that the trend is going to reverse. We know all of these things. But in reality, if I can put this on more than one tool, I can put this on, I'm on the pivots, but at the same time, it looks like the bounce back. So I can take this same information and apply this to the bounce back, because if I know what's happening, which is another one of the tools that we utilize so much, and, you know, Miss Duncan, who introduced me, you know, that's what she trained on, is the bounce back. And after our Tuesdays training, I got a message from her, because just from being able to identify the candles, she sends me a message that she was able to identify even more about her entry point and where she could actually take the trade on the bounce back, because she was able to look at the candles and know when and where she should enter. That's why understanding the candles are so important. And right here. So what you can't see on this screen shot is a strong downtrend. And here we got the 3 white soldiers, right? And then we move into that uptrend. And after the 3 white soldiers, what happened? You see how the sellers tried to pull back and fight a little bit to come back, but it continued in that uptrend, just what we were just talking about, and the exact same questions you all just had. So it came from a strong downtrend, 3 white soldiers, right? Strong candles. They're strong candles. Strong candles. And they tried to fight back, and it went into an uptrend. Now, this shouldn't be here, so pretend like you don't see that. But this is actually an evening star. And that's when the trend turned back around. And we went into a nice, strong downtrend. So, but I did want to put this on there because it was new information to show you the 3 white soldiers, but it'd be the same thing. But I did put this on there to show you what it would look like, but I just wanted to show you 3 candles on the chart of what it would look like. But the biggest thing is this is a perfect picture of what they would look like, whether it was 3 white soldiers or if it was vice versa for the 3 black crows. This is a perfect picture of what you're looking for when you're seeing that, because it was a strong downtrend. Oh, goodness. Did not mean to do that. So let me get back to that point. This mouse is just sensitive. So this was a strong downtrend. I had my 3 white soldiers that came with that reversal of that trend, and the sellers came to fight back. But these are 3 strong green buy bullish candles. They tried to get back in the game. They could not do it. So if we would have got into the market, we had a nice uptrend. So before we look at anything else, do I have any questions, comments before we move on?
Ms. Dyer, this is Alfred.
Yeah.
Question for you. I thought one of the most important things, even though everything wasn't important, was the entry point. Where I have a problem is, how do you determine the entry point? Because that entry point is very significant for setting the pace of everything else that you do. How do you make that decision?
Well, like for example, if I'm looking, one of the things in the academy that we learn is trading the trend. I'm gonna go back to this one. Is trading on the uptrend, for example, right? This is where we're trading. So if we're trading on an uptrend and we're trading, because the trend is our friend, and then if we're trading on the pullbacks, each one of these pullbacks is an entry point. You know, each one of these pullbacks is an entry point. We're always taught get in on an entry point, right? So what this does is we talk about understanding first. We don't just, these are entry triggers. That's what they really are. These candles, yes, each candle tells a story. However, they tell that story of what's going on in the market. They tell that story of what's happening during that time frame. They tell you that you can look at a candle and know what the buyers and the sellers are doing at that moment. You know, you can look at it and tell that. But you don't just trade by looking at the candles. We're not trading by just looking at the candles. What we're doing is we understand what is the market doing. The market is trending up. The market's trending up. So if the market is in an uptrend, then like for in this example, this is an uptrend. And that means I trade on an uptrend, I enter on the pullbacks, right? So all of this comes through the training and the academy and practicing and demoing, but I'm trading on the pullback. So I wouldn't get in I wouldn't get in this in this particular portion of this uptrend. I'm not going to get in the market right here. You get in the market on the pullback. So what I would do is, now that I understand those points and I have a trend line, because I'm either going to do it on support and resistance, right? So support and resistance lines, which are these black lines, right, as well. Or I'm going to do it on my moving average. I'm going to be looking at the moving average line, or I'm doing it off of the trend line. So once I've identified the trend, I understand what I'm using to evaluate. And in this case, it's a trend line. That's what's on here. So when I get to this pullback, then I look at the candles. So that means that if I look at this candle, I have no reason or indication by looking at this candle that I will get into this trade. None. I get to this next one, I have no reason or indication to get into this trade because I'm in an obvious downtrend. I get to this candle, no reason or indication to get into this trade. But then when this next candle begins to form, so depending on what chart I'm on, right now I'm on a 4-hour chart. If I'm on a 15-minute chart, it's the same thing. I just need to understand what chart I'm on so I know that if I'm on a 4-hour chart, I need to check back in 4 hours, because that's how long it takes for these candles to change. If I'm on a 15-minute chart, it's 15 minutes, right? So it's just what chart are we on, what are we doing, and how we work. If it's a daily chart, then I check back tomorrow. So it's just what are we working with. So when I enter on this pullback, because now I have an engulfing candle, an engulfing pattern, because I have a small sell candle and a large buy candle. This buy engulfs the green. I mean, the green one engulfs the red one. So it engulfs it, meaning it changes. The buyers are obviously stronger. And when it engulfs, it has to be completely engulfed and closed, meaning that the red one is completely, the green one can cover the red one. So, and it's engulfed. Now, this is where I would enter on this. Like I said, this is exactly why I put this one on here, because this would tell me I'm going in a downtrend, right? I'm going in a downtrend. However, guess what? No, I need the tweezers that reject the lower price and go on an uptrend. These are not the right tweezers, but these tweezers do not go along with what I'm looking for. These tweezers are not the ones that go with this trend line. They will go with a downtrend. So I do not enter on that, because that tells me that something is about to change in the market. That yes, the sellers did attempt to take control, but it's not going to stay that way. Because I turn around and I get a doji, which says, because look, I had a green candle. I get a doji, which negates this pattern right here. So it changes this. And then I turn around and I have my morning star. So based on my morning star, this is where I will enter the market. This is my entry point.
Question.
Yes.
Also, too, as we look at that engulfing bullish candle, and as we see that bullish candle engulfing the bearish candle, that would also be where we would enter in, because that identifies that the trend is changing and moving in the upward direction as well. Correct?
Correct. Yes, because this first one indicates the change of the direction of the trend.
Right.
This first one means. This one is the pullback. So it pulled back, and then because this one came out of consolidation and then went down and started in an up position, uptrend. It pulled back. So I needed something with, when it pulled back, I needed to make sure when it pulled back, I had to make sure, and now I'm headed in an uptrend. And then I pulled back some more, and I'm headed in an uptrend. And now, just like we had the engulfing down here that showed me that my trend was changing, when I get here, I have the Harami candle pattern that showed me that, this is not another pullback. I'm not going into another pullback. I'm actually having a change of trend. And that's what happened right here. Does that answer your question?
Yes.
Okay. So let me change my share. So what I'm on right now is the pivots, right? And one thing I want to highlight is that they have been updated. They have changed. I'm not going to click on anything because I don't want my information to go away. But they now have the different strategies that we talked about, and the different strategies that we discussed are now in there. So we got strategy 1 and then strategy 2. So with strategy 1 and strategy 2, now I'm very excited because, as you can see, we talked about the pivot point, which what we literally just was discussing. Like, you could see the lines, but you could not see the numbers in my screenshots. So the P4 is that pivot point. So that's the center of the movement of all the calculations of what the market is doing. That's the center of it. So then we have all the way up to the resistance 8, and then we have down to the support 0. And remember, about 45% of everything that happens is going to happen between S3 and R5. Now, what you're used to seeing when I pull this up is actually now on what's called strategy 2. So you have to click the button over here and change the strategy. So here is where you would change the strategy from strategy 1 to strategy 2. Now, that's over 250 a day trades that you can take just on those strategies. On strategy 2, I mean, literally, is it probably more than that. I just know it's a minimum of about 250. I mean, you're talking about over 5,000 pips a week being caught just on the pivots. So I love it. And that's just on what they're issuing and what they're pushing out and what they're giving. Now on strategy 1, it's really, I don't even know if it's a way to where you can really calculate, because just like what we were just talking about. Okay, so we talked about when I drew the extra lines for the +1 and the +2, because the market is going to withhold in between these pivot points 95% of the time. So if it gets to +1 or it gets to -2, 95% of the time the market's going to pull back and stay within there. So if I pull over, just like the market, well, the pivots adjusted. Remember I told you the pivots adjust. So this is one of the cases where the market did not stay within that area, and so the pivots had to adjust. So that's that 5% time frame. So the pivots adjust every day. So we don't have to figure that out. That's the beauty behind the tools. That's the beauty behind what we're looking at, is we don't have to go in and we don't have to try to figure that out. But what we do is when we come onto the pivots, when we get to the pivot screen and when we come on here, we know that the market is going to pull back 95% of the time. Now, what we just looked at and what we just saw, we get an opportunity to know and to see exactly what's going to happen, or how do I trade this? How do I know when the market's going to turn around? You know, what do I know? And when I say that it's no way to calculate 5,000 pips a week on the strategy 2. So imagine how many pips and how profitable you can be on the pivots alone, just by using the information that you just got tonight. I mean, literally. So I'm looking at the time, but I just so we can't go through each one of these that I had highlighted for us to go through, but R8 to, like, one of the entry points that you typically use is R8 down to S2, or S0 for a buy up to R6. So that is where, because that's where the market, this is that bottom, that lowest support level, and that's the highest resistance level. And then
so just let me add something to that, especially for our guests. Folks, we're just talking about this particular tool is the pivots tool, as Ms. Dyer has already shared with you. But I want you all to be aware that this tool also collects the same data, not only for Forex, but also for the indices, metals, oils. So literally with this one particular tool, with all the multiple opportunities you had to take full advantage of the market, that's what you have your hands on. That's why we are so enamored with the multiplicity of tools on top of the education that we have. And this is just like, once again, one particular strategy. And Ms. Dyer, if you could just jump out of the Forex and just show the other things that a person can take advantage of with this particular.
One step ahead of me. That's exactly where I was going. I just want to show you, if you click the S1 down here at the bottom, it'll show you that we're looking for a sell. It also gives you your entry point, your stop loss, and your take profit. So that's you without doing any analysis. But just imagine how much more profitable you can be doing analysis, and you can trade from pivot to pivot. You can select your own strategies and your own lines just from doing the pivots. But just as Mr. Rogers was just saying, I mean, we have the US 30, so we can literally come in. I'll pull it up on the hour. So on the hour chart, I can pull up, okay, let me refresh it. It's showing you, I'm trying to refresh it, but you can see that we can trade the US 30, the German 30. I can go to metals. And on the metals, you're talking about gold. I can trade different. So this automatically jumps to strategy 2. So this is what we were just discussing. This automatically jumps to strategy 2. So on strategy 2, it has everything listed on there. It's going to tell you your entry price, your take profit, your stop loss. It's going to tell you what each pivot line means. So that's what we meant about the S0 and the R8. This is the hardest line to fall below in oversold conditions, the ultimate resistance, extremely overbought condition. So this 95% of the time, the market is going to stay within this area. So we have oils, right? We can trade oils, and then also cryptocurrency. So you can apply the pivots and everything that you have learned this evening to anything that your heart desires as far as trading is concerned. Anything your heart desires. And of course, I'm going to show you one other thing, because the proper knowledge is power. You know, it's all about what you're being educated upon. Once you get your candles and you go through and you evaluate, we can always, let me expand this just a little bit. You know, I love the Hikanashi candles. Confirms the trend. It confirms what you're looking at, and it confirms the trend. And because that's what they do. It talks about the green is a strong, it takes the noise out. So everything you just analyze, and then it focuses on the trend. You can definitely win on this pivot, on the pivots. You can definitely win understanding the candles, understanding the market, and you just definitely putting yourself in a position to win. So before we transition this call, we have any questions, comments? We have about 1 minute for any questions or comments. Ladies and gentlemen, this is how we are impacting 1 million families. 1 million families by the 28th of March, 2021 is through this education platform. By understanding the BYOB movement is going to educate, financially educate 1 million families. I saw on the news this morning that I want to say to year 25, 26, that you are looking at a retail apocalypse. I'm telling you, more people, more stores. We think we've seen a lot happen. We think that we've seen a lot of stores shut down, a lot of things happen, closing, but I'm telling you now, that's why this financial education is so important. It's so important because we have to begin and we have to take control of our finances. So before we transition, do we have any questions, any comments?
Fantastic. Thank you so much, Ms. Dyer, for taking the lead on educating and empowering. And folks, it's real simple. We're absolutely excited about our BYOB movement. This was our study hall this evening. And folks, when you look at the multiple strategies we have, the multiple tools that we have, literally, we are having access and having the same types of tools that the big banks of the world utilize. Right now, you have the same ability from the comforts of your home to tap into the market. And that's why we stay excited. So as we begin the transition, folks, beyond the shadow of doubt, if you're on this call tonight as a guest, as a business partner, whatever you see, our movement is real. It is happening. The BYOB challenge is in full effect. And as we get ready to transition, this is why education, applied information is so of a necessity, and having the ability to have